Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P500 followed by the Nasdaq100 and the DowJones30 futures chart on this very final trading session of the week. And of course today it is Jobs Friday, so we are expected to get non-farm payrolls figures in approximately 1.5 hours time. From the time that I'm recording today's video. Normally I would actually wait until after the data, but today I thought I would take a little bit of a risk and kind of share with you all some research. So I hope that the majority of you get to read this and see this video that I'm posting out on YouTube today prior to the non-farm payrolls figure coming out. If not, no worries, there will also be some really handy and useful information going into next week's trading week as well. But of course, we are expected to get the non-farm payrolls figure in about an hour and a half's time. The market is trading lower to start off the month of August, and this is something I have correctly predicted. But I'm now flipping my bias. I've made some great profits over the past couple of trading sessions. I had a sell signal I had a sell signal in the S&P500 and the DowJones30, which yielded me 2.11%. So I'm very happy with those profits. But I've now flipped my bias to being bullish. I do think that there's a tactical trade where we could trade back up towards the swing highs. I did say going into the month of August, if we did see a correction, it will likely be a very shallow one from anywhere from 2.5 to 5%. And at this moment in time, the S&P500 is approximately 2.08% from its high, and at the lows we were down around 2.62%. So that would have meant that my bias was correct. And we had hit that 2.5% drawdown target. But I just wanted to quickly share some of the research that I've posted on my free trading signal group this morning. And it's with regards to the jobs number. Now, this is my Bloomberg terminal. And as you can see, it kind of just shows you the consensus for last month's non-farm payrolls figures. And as you can see, the estimate going into last month was 230,000, and this was after, of course, the ADP figures come out a few days prior to the non-farm payrolls figure coming out, and it coming out at a staggering 497,000 jobs created. And of course, that obviously boosted up the estimates here for the non-farm payroll figures. But as you can see in red, this is the area that I want to draw your attention to. Most analysts were forecasting for the number to come in between 245 to 265,000. And where did the number actually come in last month? It actually came in at 209,000. So quite significantly lower than what analysts were expecting, and of course below the estimates of 230k. So it was quite a nice dovish surprise for the non-farm payroll figures, and in fact it was the first negative reading that we had in over 15 months. Now moving over to this month, now the estimates are coming in at 200,000. What's really interesting is that forecasters have actually lowered their estimates, and what's really interesting as well is that we had the ADP figures come out just 2 trading sessions ago on Wednesday, which come in at 324,000 versus 497,000, which was last month's reading. So that shows a 174,000 jobs drop since the month prior. So that's very interesting. However, that being said, the non-farm payrolls estimate has only been reduced by 30,000, because don't forget, last month the estimate was 230, this month it's 200,000. Now, what's really interesting here is that this now opens up the door for a potential hawkish surprise. Reason being is because the majority of analysts are expecting the number to come in lower. So if we did in fact get a number that come in a range of, let's say, 200 to 300k, more towards, let's say 300k, so north of 250k, that would then be a very hawkish surprise for the markets, and you probably likely see the markets deteriorate after that number is released. The good news, however, is that for the past 2 to 3 years, I've been following and reading blogs from a company called Deep Macro. And this is a research company, and they have been very, very effective at predicting the range that the non-farm payroll figures will likely come out at. And this month, they are expecting the numbers to come in at only 84,000 versus 200,000k expected. So 84,000 jobs last month versus 200,000 jobs expected. So a massive fall in jobs created compared to the figure that we got last month, which was 209,000. And you're probably wondering, why trust Deep Macro? And the reason I trust them is because they have a very good track record, hence why I've been following for the past 2 to 3 years at predicting the jobs number correctly. So I think that it'll be very interesting to see whether we do get a number that comes in sub 100k, because as you can see, there's not many analysts towards the bottom range. In fact, there's almost none. So if we did get a number that come in lower than 100k jobs, that would be very dovish for the markets, and you would likely see stocks rally as well as precious metals. And that to me would probably indicate that we have achieved a low here for the month of August. So I'm actually quite bullish going into this print. I've actually bought the S&P 500. I've just sent a signal out to my free trading group to buy the Nasdaq100, as I do expect us to see an upward surprise. And even if we don't get that today, I think that that's likely going to occur as we move into next week, because we are expected to get a CPI reading, which I do believe will come in a lot softer than expected. So I like the setup here. As well as that, we have Apple, which is down 2% in pre-market trading. They actually had a very good quarter last night. I think obviously if it's just some frothiness getting taken off the top there, as the stock has rallied significantly so far this year. But I think that buyers will step back in and buy Apple, and I think it's only a matter of time until we do see the stock trade above $200 a share. And at this moment in time, Apple represents 8% of the S&P 500. So if Apple does manage to regain that 2% that it's currently trading down in pre-market trading, you will see the S&P 500 likely trade back up towards 4,600. So I'm bullish here. I'm a buyer. I think that you can target the swing highs up at 4,600 as we move into next week's trading week. Then moving over to the Nasdaq100, very similar. Of course, Apple represents a very large portion of the Nasdaq100. I've just sent out a buy signal over on my Telegram group chat, which is my free signal group chat. So if you want to copy both the S&P 500 and the Nasdaq100 trades, then make sure you scan this QR code. It will take you to my website where you can sign up for completely free of charge. You get 1 month free, and you can cancel at any time. There are no catches at all. And then moving over finally to the DowJones30, the more cyclical trade here. I do believe that this still has to play catch up. From a annual perspective, year to date, we're not up anywhere near as how much we're up for the Nasdaq100 and the S&P 500. So, going into the next couple of months, I do expect the DowJones30 to play catch up. We have consolidated slightly here. I did expect us to go down towards a 50-day EMA, but I don't think that we will go that low. This is clearly a dip buying market, and dip buyers have already returned here to protect the 0.786 fib area. And once we can break above the swing highs here at 35,674 thousand here for the DowJones30, that will likely open up the door for us to trade back up towards the previous all-time highs. But there we go, guys. That's my analysis on the 3 major US indices. A bit of a risk coming out prior to the jobs number, but yeah, I have a lot of faith and trust in deep macro, and I think it'll be very interesting to see. Even if it isn't 84,000, we get a number that comes in at 110, 120,000. That is significantly lower than last month's number that come in at 209,000. That would still be extremely dovish. So yeah, as I mentioned, big risk coming out and posting this video prior to the jobs number. Hopefully it works out for you. But I just wanted to update you all because I think, I had been calling for a market decline of 2.5 to 5%. We've had it in the first 4 days of August, but now I'm actually looking for a good buying opportunity here to take advantage of all these dips. Have a lovely weekend all. Don't forget, if you'd like to join my free trading signal group, then make sure you scan this QR code on your screen. It will take you to my website where you can then sign up.